Hello and welcome to Pro Trader Strategies Market Commentary for Monday, November the 21st. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. It's a Monday, so not a whole lot of economic data, and as a matter of fact, I don't think we have a whole lot of economic data on the docket for this week. The one thing we do have going on right now in the next minute or so is we should start to see some of the headlines for Draghi, and Mario Draghi is speaking at 11:20 Eastern. He's the ECB president, so could hear some good things come out of there, hopefully stir up the market a little bit. Anyway, over on to the markets. We've got crude oil here up over $1.50, just cruising higher despite the fact that there's a glut of oil out there. The bulls are really taking hold of this market right now as we're pushing past the point of control, which is where the most time and volume's been spent. Should go up here to test the 61.8 Fibonacci level relatively soon, it's looking like, so we'll have to see if that holds. I have bearish positions on in this, and if it gets above that fib level, I'm probably going to just pull the ripcord on it. It was kind of a stab at it. I thought we'd see after that huge build last week of over 5 million barrel build, when it was expected to be almost unchanged. Thought we'd see at least a bit of a pullback, but the markets can stay irrational longer than we can stay solvent, so therefore I may be looking to cover that strategy rather soon. Not that it's going to blow me out because I didn't actually do it that big, but just not looking like it wants to go any further to the downside at this point anyway. On to gold. Gold futures up just slightly on the day, almost $5, and still in a downward trend. This is getting very close to crossing over, which would really signal more bearishness to come. So we're going to have to keep our eyes on that one going forward. Then on to the bonds. As you see, we've talked about this. This is usually what happens when they cross, is you start getting a really serious drop-off in that market, which bonds have seen, and bonds are actually very close to their 100% retracement on the fib level, which was happened at the beginning of last year, end of last year, beginning of January, which was when that Fed increased rates. So we could be heading into that for this December as well. So we'll have to keep our eyes on that. Going forward, it's starting to look like the Fed may want to increase rates for this next meeting. So that's going to be a huge thing to look for in the markets going forward. We're going to have to start really paying attention to what these guys are talking about doing. Dow Jones up almost 50 points on the day. Doesn't look like it's really done much. As a matter of fact, all last week, this week is probably going to be pretty quiet, aside from some of the Fed governors speaking and things of that nature, some of the talking heads out there. So I don't really see this having this type of move that we've seen when we saw that rotation out of tech and into like the Dow and the Russell. So that I think is pretty much taken place, and those guys have rotated those positions already. So I could easily see this start to trend sideways, where we'll see the tech sector like the NASDAQ maybe start to push higher and outpace the rest of the broader markets like the Dow and stuff like that. As you can see with NASDAQ up almost 40 points on the day, let's call it 39 something and change. Then the E-mini S&Ps up 10 points on the day, but really just trending nicely higher. As you can see here, it's just been lockstep, just trudging higher. Just I think I can make those new highs is what it seems like it's trying to say to me. But E-mini S&Ps right here, 15-minute breakdown. As you can see overnight, pretty much traded sideways, but as soon as the markets opened here in the United States, we got the day session opening up some people took some profits, and then off to the races and testing the intraday high as we speak. So NASDAQ up almost 10 points on the day. FXC, this is on to a couple of things that I've done. FXC, I have on a long call spread, and clearly it is not working. The market came down here and made a new low on Friday, and I decided, I think it was just a little bit overdone. So with the high implied volatility in there, I thought I'd take advantage of some high premium in there, and I was able to get pretty far away on this and was able to sell the December 100 puts for 43 cents. So adding a little bit to that overall strategy to the bullish side. I was wrong in the beginning, but I was maybe just a little early. I'm hoping to see a bit of a snapback for that one. I don't think my call spread's gonna be anything to write home about. I think it's probably gonna expire worthless, but trying to staff some of the bleeding by selling some of those puts in there and lowering my overall outlay of cash that I did on that call spread. Then on to American Airlines. Now, if you remember with American Airlines, I had on the January 41 straddle, and I bought this straddle. Remember, when you have a straddle that you're buying, you need a big, large move, and I actually got that with the airlines almost immediately after putting on that strategy. So I did this for the webinar on how to set it up when you're doing a debit spread on these straddles and strangles, and it's a low probability trade, but I happened to pick the right one, and this one worked out quite nicely. I originally paid $5.02 for that strategy, and was able to get out of it for $6.77. So that was about a 35% increase in the premiums, and that's right in line with what my rules are on trying to take that strategy off for a profit. So that one worked out really well. So it was a nice example of how to do a long straddle. Wasn't expecting it to work out that well, but it did, and that's good news. Then on to Amazon. Amazon, if you remember, I had on this strategy as well, and I did this as a 1x2, and I had on the December. I bought the 780 puts, and then sold two of the 750 puts. So in order to finance those 780 puts to the pullback downside, I financed it by selling two of those 750 puts. And believe me, this strategy went way against me for quite some time. You want that market to come down and pin at those 750s or just above that, which is what I was looking for, but it really overextended to the downside, and at one point was looking to test this 700 area, but we got this market move back, and on Friday I decided to cover this trade as soon as it started looking like a nice profit on there. So I originally collected $1.70 on that strategy and bought it back for 50 cents. So it was just about $1 profit, a little over $1.20 profit for that matter. So that ended up working out quite nicely. As a matter of fact, it might even be better today. Then on to JP Morgan. JP Morgan was a trade that just did not work out. I had on a put spread in there. It was the November, bought the 7.5 puts, and then sold the November 62.5 puts. So it was a long debit spread, and I originally paid $1.58 for that and let it expire worthless, just waiting for a pullback, which was never going to come. That was 67 was way down here. I was looking for it to start falling off because I was under the assumption that the Fed was not going to increase rates, but the Fed speak of an increased interest rate, and that's good for the banks. So the overall broader banking sector really got a pop, along with the airlines, and some of that rotation we saw getting out of tech and into names like this financial sector, the utilities, things of that nature really started booming in that big rotation. So that made that strategy not work out. And then with EA Sports, this is one that I tried covering on Friday, never got close to my profit target, but today it actually came in, and I had on the December 70.85 strangle, and I originally sold it for $1.01. I covered it for 50% in my max profit and got 50 cents out of that strategy. So that was nice. You get that volatility coming in, that theta decay happens, and that strategy worked out for me quite nicely. Looking at doing a couple other trades today based on the iron butterfly webinar that we did on Friday, and I'm going to be looking to put those on a little bit later today. I haven't really had the opportunity to get my trades in. They're in, or they haven't executed those trades. They're working right now, but I haven't gotten hit on them, so that's why I haven't been able to talk about it today. Anyway, Friday's webinar, it is a holiday. We're going to be sending out the video on how to defend the iron condor and the iron butterfly. So keep your eye out for that. That's a really good one. You need to know how to defend these when these strategies stop working and it starts going against you. There's a lot of ways to be mechanical about that and increase your probability of profit by getting a little bit more credit. And I show how to roll those strategies and when to roll those strategies. So keep your eyes out for that. Go to protraderstrategies.com, sign up for the webinars and these daily market commentaries, because this is where I talk about all my trades, when I'm putting them on, how I'm defending them. And in the webinars, I go into really deep detail as to my rules around those different strategies that you really probably won't get so much in the daily market commentaries. All right, so go to protraderstrategies.com and sign up for that. If you can't take that, take it easy.